On Thursday, the United States Senate voted on what could be the most consequential crypto law in American history. Bitcoin immediately jumped almost $2,000. Coinbase surged 10% in a single session. And most Canadians are asking the same question. Does any of this actually affect me? I'm your crypto compass. Let's get your bearings. This week, the Clarity Act cleared a major hurdle in the U.S. Senate Banking Committee. A bipartisan 15-9 vote that sent markets moving in real time. In the next few minutes, I'm going to tell you exactly what passed, what the bill actually does, and most importantly, what it means for your money if you're investing in crypto in Canada right now. By the end of this video, you'll have a clear answer. Let me give you the facts first, then the context. On Thursday, May 14th, the U.S. Senate Banking Committee voted 15-9 to advance the Digital Asset Market Clarity Act, commonly called the Clarity Act, out of committee. All 13 Republicans voted yes. 2 Democrats crossed the aisle, Senators Ruben Gallego from Arizona and Angela Alsobrooks from Maryland. Now here's what that vote actually means. And this is the part most headlines get wrong. Passing out of committee is not the same as becoming law. The Clarity Act still has a long road ahead. It needs 60 votes on the full Senate floor, meaning at least 7 more Democrats have to cross the aisle beyond the 2 who voted yes on Thursday. Then, it needs to pass the House of Representatives. Then, be reconciled between both chambers. Then, be signed by the President. The White House is targeting July 4th as a signing date. That is ambitious. So, why did Bitcoin jump nearly $2,000 and Coinbase surge 10% on a committee vote? Because every previous attempt to pass comprehensive U.S. crypto market structure legislation died in committee. Thursday's vote is the furthest any crypto bill has ever gotten in American history. The markets priced in that milestone the moment the result landed. And coming up, I'm going to explain what this bill actually does, because the details matter for Canada specifically. The Clarity Act is a 309-page bill covering 9 titles. Let me give you the 3 things that matter most. First, and this is the headline, the bill formally classifies Bitcoin and Ethereum as commodities regulated by the CFTC, the Commodity Futures Trading Commission. For years, the SEC and CFTC have been fighting a turf war over who controls crypto regulation. The Clarity Act ends that fight. BTC and ETH are commodities, not securities. This removes the SEC's ability to argue that Bitcoin or Ethereum are unregistered investment contracts. Second, most other tokens are classified as securities under SEC jurisdiction. The test: if a company holds more than 10% of a token supply, 80 because, or if investors expect profits based on someone else's ongoing development work, it's a security. Most new altcoins and DeFi tokens fall into this category. This brings the token market under formal disclosure rules for the first time. Third, the bill establishes stablecoin rules. Issuers must back every stablecoin one-to-one with high-quality reserves, register federally, and meet regular audit requirements. Stablecoin yield rules, whether firms can pay interest on holdings, were the subject of a major compromise last week, with most passive yield products restricted. This is the regulatory framework the U.S. crypto market has been waiting for since 2018. For American investors, exchanges, and institutions, the clarity this provides, if the bill becomes law, is enormous. But what about Canada? Here's the honest answer. In the short term, not much changes for Canadian crypto investors. And here's why. In a way that's actually good news. Canada already has what the US is trying to build. the Ontario Securities Commission and CIRO have been registering and regulating crypto exchanges since 2021. Coinbase Canada, Newton, ShakePay, and Wealthsimple Crypto are all OSC registered. They already operate under clear rules: segregated client funds, proof of reserves requirements, AML and KYC standards, and consumer protection obligations on par with traditional brokerages. The Clarity Act, if it becomes law, will bring the U.S. framework closer to where Canada already is, for Canadian investors using any of those OSC-registered platforms. The regulatory ground under your feet is already solid, regardless of how the U.S. vote plays out. Now, here's the indirect impact that does matter. If the Clarity Act passes the full Senate and becomes law, it removes a major uncertainty that has kept some large U.S. institutions and pension funds on the sidelines of Bitcoin. More institutional capital flowing into Bitcoin at scale is generally supportive of price appreciation. Canada's Bitcoin ETFs, with assets approaching $6 billion, would benefit from that tailwind. The Clarity Act won't change which Canadian exchanges you use. It won't change your CRA reporting obligations. And it won't change how Bitcoin ETFs work inside your TFSA. But it does signal that the world's largest financial market is finally building the rules that Canada built first. If you found this breakdown useful, subscribe and hit the bell. I publish every Wednesday and Sunday, covering exactly this kind of story from a Canadian angle that no one else is telling. So here's the bottom line. The US Senate took its biggest step yet toward clear crypto rules this week. Bitcoin recovered to above $81,000 on the news. Coinbase jumped 10% in a single session. The markets are pricing in that US regulatory clarity is finally after years on the way. For Canadians, the near-term impact is indirect but positive. A more regulated U.S. market attracts more institutional capital into an asset class you may already hold. What's your take? Does U.S. crypto regulation matter to you as a Canadian investor? Drop your answer in the comments. I genuinely want to know. I'm your Crypto Compass. See you in the next one.